What if I told you there's a way to trade these markets without looking for a daily bias every single day, or even looking at the higher time frames as well? Well, that's the exact reason why you've clicked on this video. You want to understand how to trade these markets without looking for a daily bias and overcomplicating yourself by looking at the higher time frame. And in this video, that's exactly what I'm going to do. I'm going to remove all the confusion you have towards these markets, and I'm going to break it down into 3 simple elements. The first element is going to be why you don't need to focus on a daily bias at all if you trade the lower time frames. The second one's going to be looking at ranges within the market, and they're going to be your replacement for a daily bias or the higher time frame. And then the third one, and the most important one, is looking for executions using this new logic that I'm going to show you in this video. So make sure you're watching up until the end of this video, because I do have a special surprise for those of you that make it that far. With all of that being said, let's get into this video and let me break down exactly why you won't need a daily bias anymore. So the first thing we are actually going to cover is why do you not need a daily bias at all? The decision-making part of trading. The less you need to make, the better your trading is going to be. So if you're looking at the daily time frame every single day, trying to sort out where the market wants to go every single day, that's exactly where your decisions are going to be impacted within the market. The higher time frame and the lower time frame are not always going to agree, and I know this sounds weird to say. So if you're looking at the daily time frame, right, the daily is bullish. The market's clearly trading to the upside. You want to trust buying setups. But on the lower time frame, you're always going to see something opposing to this, because the market works with an open high-low close and an open low-high close. So if we want to trade to the upside, first of all, the daily candle has to open up and trade to the downside. So there's going to be a selling setup which occurs within the market. So it's going to be the downside move. And the upside move, if the daily candle doesn't want to expand that much, is going to open like this and then push to the upside. So we opened up, traded lower, made the low, and then traded higher. So the buying move was offered right here, but the market offered a selling opportunity. As the higher time frames, the daily time frames bullish, you can only look for a buying setup. So if you try to buy as the market's pushing lower without understanding market narrative, that's exactly where you're going to get burnt out. So that's why I focus on not needing a daily bias or even looking at the daily time frame, and I'm going to show you what you are going to substitute for that. But firstly, you need to understand why you don't need it at all. The less decisions that you need to make, the better your trading is going to be. If you can sit in front of the market and be like, okay, I'm bullish today, I'm bearish today, I'm only taking buying setups, I'm only taking selling setups, and I can be in and out of the market. Then we have subjective and market narrative. So daily bias is one thing that so many traders have a different twist on it, and mainly that comes down to their personality as a trader, because not everyone's going to be cut out to be trading on the lower time frame. If you're not cut out to be trading on the lower time frame, then you don't need to look at the higher time frame, in my opinion, because if you're scalping, all you need to focus on is a range within the market that I'm going to get into. But if you're intraday trading, so you're planning on holding positions for a few days, then you should be looking at the daily time frame to build up a narrative of where the market wants to go in a short-term period, so like for a week. If you are swing trading, then obviously the daily, weekly, and monthly timeframes are going to hold a lot more importance to you. So that's where the daily bias importance actually comes in. But if you're trading intraday, so in the lower timeframes such as the 1 minute, 5 minute, and especially at 9:30 open in New York time, then you don't need a daily bias at all. Mainly because, going back to this, the less decisions that you need to make, the better your trading is going to be. You can fully focus on the lower time frame, so look for a bias being built within the lower time frame and only trading that. And then obviously the daily bias aspect to the market becomes very subjective, and market narrative plays a key part. So as I just explained why you don't need a daily bias, let's move on to understanding how I actually trade the markets and why I don't need a daily bias every single day to make money. So all I focus on every single day is my time-based ranges. So please pay attention to the next 5 minutes of this video. Actually lock in, bring out a notepad, take notes, because what I'm about to teach you is exactly how you're going to trade the markets without a daily bias and how you're actually going to start making money. This could be a light bulb moment for a lot of you watching this video right now. So 8:12 to 9:12, this is a time-based range. This is my time-based range. I have a thesis on these markets. I understand that they run on a time-based algorithm. They work in a sequence because these markets pretty much run the world. So something that runs the world and has so much money flowing into it every single day Don't you think there's going to be a systematic approach to this? In my opinion, yes, it's going to be. It's not going to be random at all. So that's where my time-based cycles come into the market. For free, I've introduced 2 of them. The first one is 8:12 to 9:12. The next one is 1:12 to 2:12. So this is all on New York Standard Time, so Eastern Standard Time. So from 8:12 to 9:12, this is what I do every single day. So you can see, for example, the market's pushing to the upside, and then we have my time-based range being made. So for example, let's just say this is 8:12 right here, and then we have 9:12, which is right here. So we're going to wait for the market to stop printing. So this is the period that the market's printing, and then we stop. So this is where my time-based range is going to be made within the market. So now this is exactly what your brain should be thinking about. There is liquidity resting above the marketplace, and there's liquidity resting below the marketplace. All I'm looking for is a run at the high to target the low. That's pretty much it. That's basically where my bias is built from. My narrative is, so this is the story of the market. The story of the market is it's been pushing higher into the 9:30 open. Once we have the 9:30 open right here, we spike to the upside. So view the 9:30 open only as a manipulation. It's nothing else. It's not a distribution. It's nothing like that. It's only a manipulation. If you look at it like this, you're going to have a lot more clarity within the market. So this is the time-based range. 9:30, we run the high. So now your brain's ticking. The narrative of the market was it was once bullish, into 9:30 it took out liquidity. Now we can look for a bias which is bearish. So we can look for selling opportunities, and we can look for this low to get targeted. And that's exactly all I'm looking for. That's all I need. All I need every single day is aiming for 30 to 50 points. And you don't even need to trade every single day with this logic. And one thing I'm guaranteeing to you watching this video, no one else on YouTube can. My model, if you backtest this, if you forward test this, whatever, I'm going to set you a challenge to backtest it for a year. I guarantee you my model is going to give you 3 setups minimum per week. Monday, Tuesday, Wednesday. That's 3 days out of the week. You have 5 daily candles. You only need to capitalize on 3 of them. Which other strategy, which other approach out there for free on YouTube could even guarantee that? Nothing out there can, because nothing out there is quite like this. And you stumbling upon this video, you have got incredibly lucky by understanding this aspect to the market. This was the first time-based range. The next one is from 1:12 to 2:12, so this is in the morning as well. You're looking for the narrative to be built within the market. So what is the narrative? Well, for example, the market's been pushing lower, but we have the time-based range which has been built up right here. We take out the low. So for the London session, because this is overnight, so 1:12 to 2:12, 3 a.m. becomes important. So we're looking for a run at the low at 3 a.m., market to shift delivery, and then push to the upside. So 9:30 was important, 3 a.m. was important. Look at all of these things I'm telling you. Very specific things within the market. It should do this at exactly that single time in the day. So you can see that's exactly how you're going to approach it and why you don't need a daily bias at all. These ranges alone are going to be enough. And the best part is you don't need to sit in front of the markets all day. You have a very specific time within the market. You can sit in front of the chart. If you're trading the 8:12 to 9:12 blueprint range, you sit in front of the charts around 9:15. If you're trading the London blueprint range, then you can sit in front of the charts around 2:45, waiting for the 3 a.m. open, waiting for liquidity to get taken. Now, as we've gone over that, let's move on to the charts and break this down further. The date I'm uploading this YouTube video is the 22nd of October. This is the 22nd of October's price action within the London session. So I'm breaking down the price action that happened exactly today. This isn't cherry pick. This isn't anything like that. This is exactly in the moment of recording this video that my strategy, my approach to the market played out. There is nothing out there like this. So you can see this is my range. So this gray shaded area, we have 1:12 to 2:12. We've identified the liquidity rests below this low and this high. So above this high, we have buy side liquidity. Below this low, we have sell side liquidity. So let me move these tools to the side. All I'm looking for from this moment is either market takes out the low, I can target the high. Either the market takes out the high, I target the low. That's pretty much it. But now I'm waiting for 3 a.m. So let me get my vertical line. You can see 3 a.m. on Eastern Standard Time. So UTC -4. Now, all I do is wait for that. All I'm looking for is the market to take out the buy side to target the low or the sell side to target the high. And I can see we have buy side resting above this high. So these are my potential areas of liquidity within the market. And as you can see, what happens, we take out the buy side liquidity above the highs, and we also take out the time-based range liquidity as well. Now we can move on to the lower time frame to look for a selling setup. This is our bias. Our bias is bearish because the low of the range is being left. So we don't even need to look at the daily time frame to build up a bias or a narrative or nothing. All we did was wait until 245 sitting from the market to be like, okay, we've taken out the high. Now we can target the low. Now listen, there is going to be losses, but the winning trades are always going to outweigh the losses because you know, even if you took a loss, this is going to repeat again. So you can see once you've taken out the high, we move on to the lower time frame. So this is the 5-minute time frame. We are going to move on to the 1-minute time frame looking for an execution. On the 1-minute time frame, you can see we have these up close candles. Once this market closes below, we shift delivery. So we shift delivery to be bearish. We are no longer bullish because we have a bullish fair value gap. If the market was bullish from here, it should have already traded higher. That fails. Now we shift delivery. This is where we can look to short this market with a stop loss just above this high. We have an 8.5 pip stop loss. Now we're just looking for the low. So this is around a 1 to 4 trading setup. Purely mechanical, not needing the higher time frame, not needing the daily time frame. All you're looking for is a tunnel vision approach. Market takes out one side, you target the opposing end. And as you can see, the market sells off and then we trade into the sell side liquidity, which was resting below this low. And if you want another example, here's gold exactly from the 22nd of October. You can see buy side liquidity rests above the range. We have sell side liquidity resting below the range. All we are looking for now is one side of the range to be taken. So as you can see, we take out the high of the range. So as we've taken out the high of the range, our bias for the market is bearish. We're looking for a selling opportunity. We're looking for this low to be taken. As we're on the 5-minute time frame, we can move on to the M1. So on the 1-minute time frame, you can see we have shifted delivery, closing below these two up close candles. So now this is where we can look for a selling opportunity with a stop loss above this high, looking for the low of the range. So again, we have 30 points that we can make, and we're risking around 7 points on gold. And there we go, we trade into the low of the range, and this is all you need. If you struggle with looking at the higher time frame, if you don't know how to build a daily bias, this is what's going to be your fix. This is going to give you a bias every single day you sit in from the markets. It's going to tell you either if you're bullish or you're bearish. There's no second guessing yourself. And this is why this approach is one of the best in the industry. It's not an ego thing. It's how many people are having success with this, and it's not just me. And do you want to know why? It's because it's a repeatable process, because it happens within the market near enough every single day. 3 trades out of a week being guaranteed, 3 out of 5, the odds are in your favor. The only thing that's up to you is managing your risk well. And this, if it falls into the right hands, I know that trader is going to start making a lot of money from these markets, not only replicate my results, but do even better than me. I just know it. As I said at the start of the video, if you make it towards the end, I do have a surprise for you, and that's in regards to my Blueprint Academy. I am releasing something special, and it's going to include giving away evaluations to the students that do join. So that's all going to be covered by me. So if you're looking to join the Blueprint Academy from this day, you can apply from the link in the description down below. But what you need to understand is I'm going to be funding your first evaluation. And this is a huge step because that's me putting my trust in you. Once you join, you understand the markets from my lens, you understand exactly what's going on within the market. But not only that, I'm going to be working with you to giving you an evaluation for us to pass and get funded and hopefully to a payout, like some of my students have been doing if you are watching the emails I'm sending out on my newsletter. That is a surprise for those of you that are going to apply for my Blueprint Academy right now, and we have our interview process. We will speak about the size of the evaluation and the one that you are going to get, but just keep in mind it's not going to be a normal $50 evaluation. You're putting your trust in me to understand the market from this lens. I'm going to put my trust back in you to know that you're going to pass the evaluation and get our payout. So with all that being said, I hope you did find this video insightful. If you do have any questions, leave them in the comments down below and I will get back to them. And remember, I'm rooting for you and I hope you do find success in this business. As always, enjoy the rest of your day.